mendelspod.com, advancing life science research, connecting people and ideas.
Welcome to Mendel's Pod. Today we're in Napa Valley, California at the C21 BioVentures meeting. Joining us is the co-founder of TVG who puts on the meeting, Dr. Robert Lee Kilpatrick.
Today's show is made possible by SA Depot, the world's largest cloud-based marketplace for research services. With SA Depot, you can easily find the perfect research service provider and manage your project from anywhere in the world.
Thanks for joining us.
Thank you, Thero.
So please tell us about C21 BioVentures.
C21 is shorthand for 21st century. So 21st Century BioVentures, and we created the event in 1999, just before the big crash. So the event has actually gone through several iterations. We had the big crash in 99, we had a real estate crash, we had the stock market crash, and now we have what we call the Great Recession. So this has always been a place where VCs, pharma VCs, corporate VCs, CEOs, and C-level executives from private life science companies have been able to come in an intimate, relaxed atmosphere and talk about the real things, the real issues that they face in building their companies.
So we're in day one. Highlights from today for you.
Well, highlights are as follows. The theme is business models that work. And so we've been looking at how companies have survived and how they've thrived in such a, how shall I put it, a very challenging economic atmosphere. This morning we had a session on corporate VCs and how they work, how they are different from the normal VC, that they invest for strategic reasons, and they also, in some cases, just invest for return on investment. But I think they have their eye open on new technologies. They're looking for new things. Sometimes they want to buy a new company. Other times, I think SR1, the representative said, most of the companies they've invested in have been bought by other pharma companies, not GSK. That surprised me. That was new. We had a session run by Brian Atwood. We kind of mimicked the Letterman show. It's called the Brian Atwood Show. 10 reasons why you are not connecting with your VC. And that was really fun. That
was a panel of VCs, and they got to share their wisdom there.
Yeah, and it was really like, how can you read the moment when you're in the meeting? Someone's playing with their BlackBerry, someone says it's too early. That might be a kind way of saying, we're not interested. It's too late. So we got really in behind the curtain, kind of in the Wizard of Oz. We kind of could see what the wizard was doing back there, and the VCs were telling us how they really think, what drives them when they look at a new investment, and when they're sitting down in front of a person. And I think the biggest takeaway for me was get to the point. It's not about you, and show us where the value is, and try and get there as quickly as possible. I know that the Abbott Ventures speaker said, I'm only interested in whether they can demonstrate proof of concept in a short period of time. Then we had a session run by Bruce Jeanette of DLA Piper, and that was really CEOs and a couple of investors. There was a CFO as well, talking about the grim realities of funding biotech companies right now in 2012 and keeping them alive, and keeping your teams working, and which programs do you keep, which do you cut, what does it take to be a cutter, and how is cutting different than building?
Going back to the corporate VCs, which was the first panel, there's articles out this week in a couple of life science journals, a study that said that looking at companies where corporate VCs have invested, that they were more likely to have a positive outcome, a successful exit. Any thoughts on why?
Some of the speakers touched on that. As I recall, the main rationale was that corporations almost by definition are primarily driven by risk reduction. This is an important point. This is why innovation rarely happens in large companies, because the people who get the jobs in corporations, who keep the jobs during the shuffles that happen, who survive the palace coups, are the people who are primarily interested in A, surviving, advancing their careers, often at the expense of the corporation itself. This is why sometimes these CEOs get these packages and they've lost shareholders, billions of dollars. So these types of people are not interested in innovation. They're interested in buying things, and they're interested in reducing risk. On the other hand, the biotech people, they're in one of the most highly risky environments that exist. So they choose risk, they choose a high-risk lifestyle, and the only way they can survive is to innovate. So if a corporate VC invests in you from a perspective of risk reduction, in a sense, they're providing a kind of laying on of the hands. And particularly, as several of them pointed out, if Pfizer, and AstraZeneca and Merck were to co-invest with you, it's pretty likely you have an ironclad business model.
When we talked earlier, you said don't call this a conference. Why?
I think it's because conferences are often viewed by people, I think erroneously, in that they seem to be, it's rather like watching the Olympics. You see some of these amazing sports personalities doing something like ice skating that seems so easy and natural, and all you have to do is walk out on the ice and do it and win a gold medal. What you don't see is the discipline, the training, the amazing failures, the falls. And with a conference, I think there's this feeling, rather like turning on a television set or something, that this content and everything's just provided seamlessly. And not only that, in the age of the internet, there's an expectation that it should be free, or that maybe $5 or $50. Whereas our events are, they have premium pricing. But look where we are. We're in this amazing resort in the Napa Valley with a vineyard behind you. I can see vines, swimming pools, unlimited coffee and tea and drinks and that kind of thing. Beautiful reception at a champagne house tonight. So what I'm trying to do is change the thinking and introduce a concept such as a community or network or ecosystem, and say that the days when people would wait a year to go to a conference once a year are over. And now we need to be in touch all the time. So we'll use social networking and other tools between the events, and then at the event itself, which is a face-to-face opportunity, I think our network will come together. So I prefer to call it, say, face-to-face opportunity or face-to-face meeting, not conference. It undervalues the experience.
At these meetings, we hear a lot about how business models in the life science industry are changing. Are life science meetings or conferences, are conferences evolving as well?
Yes, in fact, there's a spectrum now, I think, of, how shall I put it, users. It used to be that everyone generally agreed that conferences were good to go to because, frankly, it used to be the most efficient and, in some cases, only way to meet certain people. It would be much more expensive to visit 10 people in 10 different locations, and it would be very hard to get those meetings because you have to do all that legwork to get them to agree to meet you, etc. That reason for meetings still exists. That hasn't gone away. But what's changed is, with the rise of social networking and smartphones and websites and this kind of thing, it is easier, say, to use video Skype to actually have some initial meetings with someone. Whereas in the old days, 10 years ago, you couldn't do that. So I would say that events now have to redefine themselves by taking account of the new technology and bearing in mind that face-to-face is probably still the only way you can really do a deal, but you don't have to rely just on conferences as that tool anymore.
How long have you been doing the C21 BioVentures?
14 years.
So will you talk about how it has evolved and how you see it evolving in the next 5 years?
Sure. When it was started in 1999, the concept was convergence. So at that time, what we saw happening prior to the big crash in 99 was that human health, telecommunications, computer hardware, and software, and biotechnology were all coming together in different ways to create companies like, gosh, do we remember them? iScribe, eSocrates, WebPlays, diagnostics. There were companies that would have some kind of a device where you could measure something, let's say, for example, insulin levels, and then it would be sent via the internet to some center, and then it would be read by a computer, and then if there was a pattern of something happening that was abnormal, then you might get a message back saying you need to do something, or there could have been an implant, for example, where insulin would be automatically injected. So we were seeing companies being created that brought together what looked like all the strands of high tech. That's why the conference was started. But then the crash happened, and then a lot of the companies that had been started with, I suppose, easy money, they were not viable. They couldn't come back. And so what happened was biotech and pharma basically redefined themselves again, and what they said was, well, these are just tools and technologies that we use anyway, so they don't really need to have a special niche. So we went back to the older definition of pharmaceuticals, diagnostics, medical devices. And so we went down that road. We were then still in the human healthcare area, and we've had, I think, 2 or 3 massive economic shocks to the system, such that now in 2012, we've seen a reduction over the past 5 years of the VCs investing in life science be reduced by about 50%. And there were people speaking today who said that one might imagine in 5 years there could be, well, they said maybe over the next 5 years there could be a 20 to 50% attrition rate per year for VCs, such that 5 years from now we would have a substantially smaller number. I think that's probably the biggest change I've seen since we started this conference, was that the financial infrastructure, which is comprised of people that have the knowledge of the industry, the experience of either operational experience of running companies or funding companies and investing in companies, taking them public or selling them or merging them, that whole human capital infrastructure is unraveling. And nobody yet knows if we've hit bottom, and nobody knows when we hit bottom, when we're going to come back and how we're going to come back. And I'm an optimist by nature, but I'm realistic, and I do know that the demographics favor the kind of health innovations that we're seeing here at C21, but how it's going to play out, who's going to do it, what form it will take, how it will be funded, impossible to predict today.
Well, we hope you'll join us at a future time, and we can talk about TVG and talk about you and your career for a bit longer time. But thank you for taking the time.
Thanks, Daryl.
Today's show is made possible by SA Depot, the world's largest cloud-based marketplace for research services. With SA Depot, you can easily find the perfect research service provider and manage your project from anywhere in the world.